Welcome everyone to episode number 19, one away from episode number 20, the Wide Lens podcast. I've got Matt Rigby here and we're going to cover the latest topics in finance and investing markets. And we're recording this on Friday, the 3rd of June, 2022. Matt and I have swapped spots now. I've gone, I always wear.
Gone formal.
Yeah.
Last few weeks you have. We're just not in sync. I'm back in the office,
COVID free.
Well, I don't know.
Hopefully.
Out of quarantine at least.
And I've got the suit on and Matt's got the pod gear on. Hopefully next week I'll be able to get back in the swing of things. So, all right, there's a lot going on this week. I think the world has turned, but let's kick off with Matt's Market Minute.
All right. Okay, so the last week, the ASX 300 up about 1%. That's to Thursday's close. Down about 5.7 year to date. So still relatively good. Doing a really good job. A few stocks making news this week. Origin Energy down about 11%. They pulled financial year 23 guidance. Essentially, they can't get enough coal for one of their power plants. Bit of an issue as we're coming into winter. Realestate.com down about just under 5%. Disappointing investor day. This was interesting.
What's that on the back of?
Yeah, falling listings, so fewer listings on their website, and listings that are there are staying for longer. So that's interesting. One to keep an eye on, I guess, for the future. Infant formula was in the news, so Bubs was granted FDA approval. They basically fast-tracked so they could sell tins into the US after several brands over there were recalled due to causing bacterial infections in some kids. A bit of an issue, bit more on that later. Bubs is up 34, almost 35% for the week, and A2 Milk up about 9% in probably hope, I guess, that they can also get that. Lithium stocks in the news. Argentina set a new low reference price, which essentially means that's the benchmark price of which everyone will...
From now?
What's that?
From now. Like, what's the benchmark price?
Well, I think it was like $36 or something.
Right.
And I don't have time to explain it, but essentially that has basically lowered all the other kind of market prices out there.
Right.
Goldman Sachs came out with a pretty negative view as well. Pilbara Metals down 22%. Independence Group down about 6%. And Alchem down about 17%. Lion Resources down about 10.5%. So all being hit pretty hard there. They bounced yesterday, but they got smashed on Wednesday. AGL pulled their demerger proposal, and the CEO and chairman both stepped down. Gronk Ventures, which is Michael Cannon-Brooks' private investment vehicle, owns about 11%. They've got an offer. I think it's still on the table at $8.25.
What does he want to do with it?
I don't fully understand, to tell you the truth. I think he wants to end the coal generation business a lot earlier than AGL are proposing.
Well, they are the number one emitter of greenhouse gases.
In
AGL is
Australia.
in Australia.
Yeah, right.
By
okay.
far.
Oh, really?
Yep.
Yeah, okay. So their proposal is $8.25, or their offer. It's trading at $8.73 at the moment. So a bit of a gap there. And one I missed a couple of weeks ago, but I thought was mentioning, Reckon was up 43% last month. So they announced the sale of their accounts practice management division for $100 million in cash. And at the time of the announcement, Reckon the entire business was worth about $100 million. So not a bad result if you're a shareholder. I don't know what the share price has done.
I thought the ticker was for Roku, for your little baby.
No.
I just realised because Roku.
I'll wait till that's up.
Is
we'll
gone the other way.
Yeah.
300. So it peaked at almost $500. Roku.
Yeah.
Do you know what your share price is? It's $95.
Yeah, I was going to say under 100. Yeah, I didn't get it 300. But anyway, we'll touch on that, I'm sure, in the future. The NASDAQ, last 8 days, up 8%. Massive week. That's 2 weeks
Huge.
in a row of decent returns. Still down about 22% for
That's an hour of trading in Bitcoin.
It is. Well, up 8 and down 21.
That's right.
The NASDAQ 100, so 74 stocks down more than 10%, 16 in positive territory. S&P 500 up about 5% for the week. Still down about 13% year to date.
13%. When you hear stocks like
Yeah.
Shopify,
I knew you were going to say this.
Roku,
Peloton,
Peloton,
Netflix,
Facebook,
yeah,
Zillow,
Under Armour. I mean, you could go on and on and on.
especially the apparel companies of late are down 30, anywhere between 30 and 95%. Down 95% Peloton, right?
Yeah.
And then you tell me now the S&P 500 is down 12 or 13%.
Yeah. And I think what's interesting is Apple's down probably around that number. I think they're probably down around the index. So interesting. So 29% of the S&P 500 are in positive territory for the year. 55% down more than 10%. So a few stocks of note, Salesforce.com up about 18%. Hewlett-Packard, yes, they still exist, up around 12%.
What do they do?
Computers. Well, Hewlett-Packard and then Hewlett-Packard Enterprises, which is their more consulting side.
Right.
So Salesforce beat, HP beat. Victoria's Secret, they beat, up about 5%. Chewy, the online pet retailer, up about 21%, but up, I think they're up 20% yesterday. CrowdStrike, so the online security blah, up about 90%. Okta up about 16%, but they're up another 16% after hours. Lululemon.
What do Okta do?
So they're security management,
Right.
single login type thing. They had the breach earlier this year, and they were down massively at one point. So they've come back. Lululemon up about 10%. Restoration Hardware up 13%. Stone, which is the Brazilian financial software company, Berkshire Hathaway, have a large stake in them. They're up about 11%, but 22% after hours, so doing quite well. GameStop, they missed, but they're still up about 15%, so their commentary must have been pretty good. And Hewlett-Packard Enterprises missed, but they're flat for the week. All right, wrapping up. Emerging markets up about 1.5% for the week. Still down
bleeding stopped.
12.5%. Oil up about 2% for the week. Still up 55% year to date. $117 a barrel. Any comments on diesel?
No, my wife has been filling up, and so I don't know what the price is.
Out of sight, out of mind. Bitcoin up about 5% for the week, down 36% for the year, trading at 30,000.
Although I must say, my father-in-law said that he goes to Westfield Shopping Town twice a week.
Doesn't he have a Tesla?
Yeah, to charge a Tesla. And so he's
really?
retired, and so he'll go there.
This is what he does
just
now.
chill out. He'll go there for a couple of hours, and just I don't know, just chill
charge the
time,
car.
whatever. Charge the car. But they went over to Port Ferry the other week.
Yeah, my neck of the woods.
Yeah, and he stopped by in Geelong, and he charged the Tesla in a supercharger.
Yeah.
And he said, I went to the bathroom. I went inside to grab a few things. 20 minutes, fully charged.
Wow.
Cost him $17. So you have to pay at a supercharger, but not obviously
Fuck,
you're plugging at home.
$17.
$17.
You're not filling up a car for $17.
Mate.
Yeah, wow. All right.
What I don't know though, he was saying, I don't know if this is true anymore. If you buy a Tesla Performance model, so the twin motor, the longer distance, faster, whatever, you get free charging at superchargers.
Oh, okay.
So I don't know if that's true.
That's
I
interesting.
believe it used to be in the US, but I don't know.
Yeah, I know at one point they bought in that was free for everyone that had a Tesla, and then they kind of made a user pay model.
Kind of makes sense.
Yeah, absolutely.
So he's like, I've saved so much money just since I got the Tesla.
That's crazy. All right, Tesla. Elon, if you're listening, mate, send us a Tesla.
He and everyone's listening because everyone's at work now at Tesla.
That's it, apparently. We'll get onto that later too. All right, so getting into the first chart that we're going to look at. So I mentioned the S&P up strongly this week. It was up more than 5% last week as well. So it's back-to-back weeks after, was it 8 weeks?
8 consecutive, which we haven't seen since 1923. We talked about that a couple of weeks ago.
Yeah, crazy. So up 5%, but still below the 50-day and 200-day moving averages, which, I don't know. If you're a long-term investor, probably doesn't matter too much, but technical guys, they love this stuff. So this was in Bespoke, had this chart. So we'll bring up this first chart showing the move last week and their The dark blue line being the 50-day moving average, the light blue line being the 200-day moving average. So just a couple of really interesting things to note here. So last week's rally was the strongest in the S&P 500 since going back into 2020, where it was like 7%. And the 53rd rally of more than 5% going all the way back to 1945.
Oh, wow. In a week.
In a week.
53rd. Right.
53rd on the S&P.
It's a pretty staggering number, isn't it?
That's a lot when you think about it. Yeah.
Bit of relief. Investors would sigh a bit of relief.
I was.
With that.
It's just nice to see a bit of black. I've lost my point where I was, mate. So pretty significant and still below those 50-day and 100-day moving averages, as I mentioned.
Just maybe for listeners, like what's the significance of the 50-day and 200-day moving averages?
Well, I mean, I guess the key thing is it just smooths out all the noise, all of the long-term up and down. I mean, you can see here that, and as I said, technical analysts, chartists tend to follow this stuff pretty closely. The 50-day and 200-day are just fairly significant, I guess.
So it's more of a trend, like a trend following
100% trend
measure,
yeah.
right? Okay.
And you can see early on there, you know, it's kind of hit the 50-day moving average and bounced, and it's hit it again and bounced, and you know it's done it 3 times, finally falling through, and then you know that first dip below, it kind of goes back up to it and trades down. So this is what traders are looking for. You know, technical guys, they want to see it go through break resistance, as they call it, and then they're expecting it to rally, and they want to see it bounce off that, and then the trend's alive.
So too early to tell with last week's rally?
Yeah, I think too early to tell. And look, Bespoke had some really interesting numbers. So after a 5% rally, what happened the next week? Well, on average, there was a decline of about 0.85%, which is below the average.
Are you looking at the second chart?
Yeah, getting there. Yeah, so we can bring that second chart up. So 1 week after, when we're below the 50 and 200-day moving average. So you can see
which we are now.
Which we are now. So they've broken it out. So all periods, those where we've had a 5% gain in a week, those where we've had a 5% gain and we're above the 50 and 200-day moving average, and then the situation we find ourselves where we're below those two averages. So 1 week, pretty mixed or pretty average, and even, you know, in those other instances, not a particularly great return. And you could probably say that that's just people taking a bit of a breath. You know, it's not going to continue to rally at 5%. But then 1 month after, 3 months after, 6 months, and even a year later, that trend is pretty strong. And especially when we're below that 250-day moving
So just so I'm understanding this right, like if I look at the far extreme on the right-hand side, the 1 year, that dark blue line says below 50 and 200-day moving average, which is where we are right now.
Yep.
What this is saying is on average, 1 year later, the S&P, and after a 5-week, 5% plus rally in 1 week in the market, since 1945, the average return's been 22%.
Yes.
And 6 months later, 15, 3 months later, 7, 1 month later, 2.59.
2.5, yeah.
Yeah, right.
Whereas for all periods, the number's not there, but it looks like it's somewhere in the order
10%?
of 9% 1 year, which is about the long run average that we've seen. You know, six months later, it's about 5%. So there's a fairly significant difference.
Doesn't this just speak to buying when everyone's fearful? Like classic
Absolutely.
Warren Buffett.
100%. And you know, as you've mentioned a few times, the further it sells, the market sells off, the better the prospects for future returns.
Well, the expected returns are much higher, right?
Absolutely. So that was interesting. And there's also a table which we'll bring up now. And it just breaks it down, you know, in all the instances or majority of the instances. Now, some of these, there are some overlaps because there are multiple instances throughout, say, the GFC where we had plus 5% rally. So you might get a 5% rally and then another, you know, whatever sell-off and then another 5% rally after that. So, but I guess the on the far right at the bottom there, so the percentage of return, going 1 year out, the percentage of time that we have a positive return is 92.
That's
let's
the
call it
first
93,
number that I saw.
93% of the time. And even the one instance of where we didn't, the one week, 1 month, 3 months, 6 months were all positive. It was the 1 year number that was down. So
what was that?
It was
Is
leading
that September
up to
11?
So that's 28th of September 2001. So it would have been post September 11.
Yeah. So you would have had the collapse, which 1 year from the previous year, 1 year from the collapse compared to the year before, you would have been lower.
Yeah, and that was the
Tech wreck.
War in Afghanistan.
The 2000
invasion in Iraq.
The 01 tech wreck, even
Yep.
collapse in the market, even though the economy was tanking in 2000.
Yes.
Then you had September 11.
Then you got the invasion in Afghanistan.
So that makes
Iraq.
sense. I mean, there's your 7.1% chance of not being positive, right? So if you're rolling the dice here, I mean, investing is not gambling, but
No.
if you're talking about probabilistic outcomes,
I mean,
you can't get better odds than this.
Just look at the consistency. So
This makes me feel like I should invest lots of money right now.
93%, and then 3 months, 6 months, 71, 78. We keep looking at charts, and that 75% comes up so often. So 3 out of 4 times. So look, I just found that really interesting. Look, I'm not a technical analyst, but I mean the numbers are pretty persuasive. So look, we've had 2 weeks. So 1 week out, we are probably better than all of those instances, in the chart here, given where, I can't remember what we're 7 now, but I think we're nudging, what did I say, 8% in the last week? 8.3. So depending on what it does tonight, this could be the best 1 week return after a 5% return the week before.
Since 1945.
Since 1945.
Let's keep going. I want to talk about inflation, and I just want to kick off with this first chart here, which is showing US inflation. I can't remember what it came in at, like 8.5 or something, or 8.4, something like that. But the thing that really stands out to me is it looks like, and it's very early to tell right now, but inflation in the US, I think, could have peaked. And I've got a few charts here I just want to go through that I've seen in my readings throughout the course of the week. And so I just want to set the scene with that inflation turning the corner. The second thing is inflation, long-term inflation expectations that we just got the numbers in. So I'll bring up this second chart, and this is from Bloomberg, and it's showing long-term inflation expectations. So it's the so-called 5-year forward. And so the Fed looks at this for its inflation measure from a consumer perspective. And so if you look at the far right-hand side, it's the biggest drop in inflation expectations since 2019.
Wow.
So what does that make it? 19 to 20, 20? Is that 3 years?
What's 5-year forward? So in 5 years' time, what's it look like 5 years
forward
from there?
The 5-year. You're trying to make me explain this now.
Come on, man.
I'm not going to try and explain it now. But basically, it's a measure of inflation expectation, the consumer inflation expectations.
So long-term
5 years
inflation.
out. Correct.
Yeah, okay.
Let me see if I can get some numbers here for you. So it hit. So this is from Bloomberg. The observation would have been more accurate a few months ago. If anything, market-based inflation expectations have been plunging. After hitting a record above 3% last month, 10-year break-evens are on track for their biggest monthly drop since March 2020. The so-called 5-year forward, the Fed's favourite measure, is set to post its biggest drop in May since August of 2019. Is that 3 years?
Yep. 1, 2, 3. Yep.
So, I feel like we're seeing inflation numbers come out. It's kind of turned this corner, it looks like.
Yeah.
Which then kind of dictates how consumers are feeling about the world and about their expectations for inflation.
Yep.
And so I'm just wondering, has the stock market seen this or picked this up? And that's why we've got the last couple of weeks. And so I don't know if it's the stock market waiting to see some confirmation that inflation's coming down, or whether the stock market has already identified that inflation has peaked and therefore we've seen the last 2 weeks go up. What do you think?
Yeah, I don't know. It's a good question. I mean, we've talked before about the markets very much forward looking. And there's more and more commentary about inflation. Maybe we've seen the peak, which kind of leads to the question: are the interest rate expectations that are built into the market now too aggressive? And if that's the case, then the market rallying is not a surprise whatsoever, and we could get a lot more of the rally. And it won't be straight line. We're not going to get another 5 and 8% back to back, I wouldn't think. But yeah, I mean, it's pretty good. And I guess I was looking at this and wondering, is there a chance that we revert? So once all this washes through, and who knows how long that might take, transitory and everything else. But can you see us getting back to 2019 where we had inflation was pretty benign, economic growth was pretty benign, and it was just low rates forever? I mean, that was the expectation. Yeah. Do you think we're going to get back there? Like, are we going to get over this hump and all this stimulatory money's gone through, and then we're going to find ourselves almost in a similar position to where we were in 19, and rates may just sit where they were back then, which was not far off kind of where they are now?
Yeah, I hear what you're saying. That's absolutely possible. My feel is that it'll be at a higher watermark. And so if you don't have quantitative easing and you don't have the Federal Reserve buying bonds, or the government buying bonds, and they've pulled that, you've got interest rates slightly higher than what they were. I saw the number. I didn't bring it up. Like Australian interest rates are expected to be over 3% now, 3.35%.
By the end of this year.
I can't remember exactly when it was.
In 12 months' time.
I think it's 12 months' time, possibly May of 2023. If you have a look at the US 10-year Treasury, that's back under 3% now. It's like 2.87 or 2.85 or something like that. My gut, I could be totally wrong with this. My gut feel is that we've completely overshot on expectations on where this is going to go.
Yeah.
And I think you and I have talked about this on numerous occasions, is that once we sort of hit June, July, that peak growth on growth year where we had super low bases, so the growth number looks really high.
Yep.
Because to try and have inflation continuing to grow on top of those record rates, I think it is really hard to do. And I've got a few charts I want to talk about in a second. But I think part of this has to do with what the Fed is talking about and the commentary and their tone and so forth.
Yep.
But the other is the fact that interest rate rises don't have an impact on the world and the real economy the day that central banks announce a rate hike.
Yep.
And so it takes some time for that to flow through to the economy.
Yeah.
And so I reckon it's a combination of those two things that we're seeing is central bank's commentary, is interest rates have risen, and now is probably, it's like, when you're younger, I don't know if you still do this, but I haven't done it in a long time. You're drinking just to get absolute blind. You're out with your mates. The alcohol doesn't kick in straight away, right? It takes like...
Such a good analogy.
And then...
yeah.
So interest rates are getting blind. And once it hits you, like if that's what you've been going for, just have a blinder of a night with the boys or whatever.
Yep. Or the girls.
We
don't want to be sexy.
I haven't had blinders with the girls for a long time. Yeah, we're going off track. You get my point?
Yeah,
it doesn't hit straight away.
Yeah.
And so I reckon we're getting to that point where it's now starting to go through the bloodstream.
Yep.
And it's really starting to impact markets at the moment.
Yeah, we're sitting at what, 0.02, you reckon? Maybe 0.025 on the
I don't know,
blood alcohol content?
Do you ever used to go to Crown Casino and just for a laugh, you'd blow into the alcohol rate?
Just see how high you could get it, right?
Anyway, so I think we could be. I reckon we go through this phase of overshooting, and then I reckon because of debt levels, because of where the world is at right now, I just don't think that we can be at those extreme levels of interest rates.
No, we can't. And I think I don't know. I would imagine the impact of the effects felt a lot quicker here in Australia because of variable mortgage rates, as we've talked about a few times, relative to the US.
But don't get me wrong, I think it's got time to run because we've talked about how well cushioned households and I'll talk about that in a second, household and corporations are.
Yeah.
And so for those reasons...
Although that's coming down.
Yeah, well,
some of that's coming down.
let's have a look at that. Is that me or
What, this next one?
we're jumping back over to you?
Yeah.
We're jumping back over to you. So I'll talk a little bit more about that in a couple of topics, but we possibly could have peaked inflation, and maybe, just maybe, the stock market has picked that up.
Yeah, look, and it's certainly one to watch, but it'll be interesting to see kind of where that goes. This next one, as we kind of alluded to earlier, Elon, he's back. So get back. Get your ass back in the office is essentially what he's saying. So
Yeah, I saw his memo.
It's quite funny. So Elon Musk sent out an email, internal email, which is inevitably leaked, essentially telling everyone they need to get back in the office. So quote from the email, everyone at Tesla is required to spend a minimum of 40 hours in the office per week. So if you don't show up, we will assume you have resigned. Just love it. So people who are unwilling to abide by the new rules can pretend to work somewhere else, quote unquote. Is what he tweeted out when asked about the policy. A couple other things that he had to say. There are, of course, and this I found really interesting. There are, of course, companies that don't require this, but when was the last time they shipped a great new product? It's been a while. And the last thing that I'll quote is Tesla has and will create and actually manufacture the most exciting and meaningful products of any company on earth. This will not happen by phoning it in. Fascinating. I mean, I just find this guy really interesting.
Do you agree or disagree with him?
I kind of agree to one point. And actually, something else he tweeted out, which I think was probably really interesting, is actually, I don't even know if I have it, but essentially he was saying that people on the factory floor work. Oh, here it is. So anyone who wishes to do remote work must be in the office at least a minimum, and I mean a minimum of 40 hours a week.
That's not your emphasis. That's his.
No, this is his. Sorry, this is not me. Or to part Tesla, this is less than we ask of factory workers. And I think that was a really interesting point. Like if you're asking the guys on the shop floor to work more than 40 hours a week, I mean, they can't do that at home, obviously. I think it's fair to ask everyone to get back in the office. Things have changed. Things have eased up. I kind of do agree with him, though. I mean, when I started here, you were talking about that collaboration and how impactful and how beneficial it is. And I completely agree. I mean, I think you can do that remotely, but it's not as effective as when you do it in the office and you've got a whiteboard and you're throwing up ideas, and it's just you talk online, on a Zoom, and someone else starts talking, so you wait, and there's all these awkward pauses. Where when it's in the office, you can read the body cues a hell of a lot easier.
Yeah, I feel like you can just go through, you can share information, you can share screens.
And a whole lot quicker too, I think.
Yeah. Look, I think there is space for, like, in the consult. So we're in consulting and advisory, really, aren't we?
Yep.
And I think there is space where people can have, we call it focus time here, for people to have a day or two of focus time.
Yep.
But yeah, I reckon that's the limit, man. Like otherwise, you sort of lose that spark and that creativity and the dialogue if you just,
and the incidental conversations and
so
thoughts,
many
that's pretty
so
big,
many.
I think. So
I don't think he's too off the mark here.
No, and look, the other thing I'll note, which we've referenced a few times, there are more and more companies that have stopped hiring. A lot of Bitcoin related companies getting rid of a lot of people. As that unemployment rate starts to tick up or jobs become a bit harder to come by, this will become more the norm, I think. Not to say it'll be 100%, but I think you won't be home 5 days a week or 4 days a week.
Yeah, it will be majority. Yeah, I agree with you. And people are now talking about employers are ignoring what employers want.
What employees want?
What employees want. And these are articles I was reading in Bloomberg that employees want freedom and flexibility.
Yeah.
I don't know. If you want freedom and flexibility, man, go start your own business.
Yeah.
That's an idea.
Yeah, absolutely. Like the Atlassian guys. What was their driving motivation? We don't want to wear a suit, but we want to make as much money as we would if we were wearing a suit. And
you've been commenting on my suit and tie these last few weeks.
All right, what's going on?
Like, why are you wearing a suit? Why are you wearing a shirt? Why are you wearing a tie?
You're interviewing for a new job, mate.
Interestingly, the Pasquale family and the Pasquale Pearls.
No.
Oh, so they're a very wealthy family. So they own a building in off Wall Street in New York.
Okay.
And what they're redesigning it to do, they've redesigned it. It's a very old building, and they've got designers to come in, and they've redesigned it, the interior, to make it and look and feel like 1970s sort of old banker Wall Street.
Oh, really?
And it's cool, old school bar. You know, your sort of your armchairs.
Yep.
You know, corners over here and lounge over there, and it just looks really. It's a bar,
all right,
and it just looks really cool.
I have to check it out.
So,
I thought you were going to say they're designing it so people felt like they were at home.
Oh, I don't know, but the Pasquale family owned the building. It was in the news the other day, and so maybe we're going to go back to suits and I don't know, double-breasted suits and three-piece. Who knows? There is no place like home. I'm going to bring up this chart from our good friends at Deutsche Bank. Jim Reed shared this. So what they did was they surveyed their readers, and this is the question. Should inflation remain elevated, averaging between 3 and 5% over the next decade, which of the following would be your preferred buy and hold asset class over this period if you could only choose one? Ta-da, surprise, property. Would you have guessed that?
Probably.
And that's why I don't think property is going to fall.
30%?
Chris Joy, 30 or 40, 50%.
I think 30 was his number.
I just don't think that's going to happen.
No, I don't either.
Interestingly, equities were still up there, notwithstanding the fact that the Deutsche Bank's recent numbers showed that in a high inflation world like a 1970s, equities do struggle as poorly as bonds.
Yep.
Government bonds are on the other end of the spectrum, in line with cryptocurrency, which I found amusing.
I thought it was amusing that cryptos were the least preferred, but maybe that speaks to the audience.
That's a good point. Possibly speaks to the audience. Cash, clearly not many. I mean, so you're just going to have to buy risky assets.
Yeah. Yeah.
I mean, look at gold.
I mean, gold's interesting because you look at how poorly gold's done this year. I mean, it's nowhere.
Yeah, in
still better than
in real
cryptos,
terms. In real terms.
Yeah, absolutely.
So we shared a chart last week. Bitcoin was down about 37%. Gold up slightly, but in real terms, it's down.
Yep.
And so, look, I thought this was really interesting. Property, almost half of respondents were choosing property as their asset class of choice. So look, let's keep going there. We're probably running behind on a bit of time.
All right.
This is me.
Yeah.
So we'll talk about inflation before, and we're talking about how it takes a while for interest rates to go into the economy and into the bloodstream, so to speak, for people to start feeling an impact. I mean, I've told you guys a story. We had a $1,700 gas bill at home for the last 2 months. If anyone's had a $1,700 gas bill, can you ping me, please? Because I feel like I'm the only one that's ever had a $1,700 gas bill for 2 months. And so we're like, turn the heater off. So we've got the heater, it was that pumping like all day, right? Like, you know, when the kids are sleeping, we wake up, the house is warm. And so now we just, you know, put an extra top on and a blanket.
Suck it up.
It's hurting the Baharian household. But let me bring this up in a second. It looks like there are some fundamental shifts happening in the economy when we have some of this data to read. It looks like the impact that central banks wanted to have are working.
Yeah.
And I think investors or market participants or observers just feel like it's got to happen straight away. And so I want to bring up a couple of charts here. The first one here is manufacturers' new orders. And that's in billions. So $73.1 billion of orders for the month of April. And so what to me this is showing is that this is like the economy is not, you know, Sam Rowe from Ticker says it's bending, not breaking.
Yeah.
And so you can start to see that V shape just starting to plateau out. But we continue to see growth. We continue to see growth in manufacturing new orders. And I think this is really important because capital expenditure, massive tailwind for the economy. We saw corporates having massive cash balance sheets that we haven't seen in decades. And so companies have still got money and cash and they're spending it.
Yeah.
I want to bring up this second chart then, which is, again, from Sam Rowe, Institute for Supply Management Manufacturing Index. And for those who don't know what this means, basically anything above the 50, the number 50 in the index represents an expansion. In manufacturing, anything under 50 represents contraction. And you can see 2013, 2016, obviously 2020. But have a look at 2022, where we are now. We are absolutely in expansionary territory. Certainly nowhere near where we were like in 2021, where we were just absolutely peaking. You're sitting at almost 65 there on the index. We're sitting at 56, and it seems to have sort of, again, way too early to tell, but it looks like the bleeding sort of stopped for a moment there. And maybe things aren't as bad as we thought that they would be.
Yeah.
What do you think about these two charts so far?
Yeah, I mean, look, the ISM manufacturing is obviously volatile. I mean, you see it moving around a lot there, but it's not to say it couldn't again drop down, but it's pretty comfortably in expansion territory. I mean,
I agree.
It doesn't, it's not often above 55, 60. Like, it's not often in that range, or closer to 60, I should say. One thing that does jump out at me really quickly is that towards the end of 19, manufacturing was in contraction.
That was before COVID.
And then it peaked and then it plummeted before COVID. So that's interesting. But I think, I think there's obviously the softening is what central banks are looking for, and it's clearly starting to happen. And it's a combination of interest rates, obviously, and supply chain issues.
Yeah, and I want to talk about in a second. Every time it's clicked over 55, it's always gone into contraction, though, subsequently. But look at 2000. Once we came out in 2013, it wasn't until 2016, another 3 years later, right? And then from 16 to 2020, another 4 years later.
Yep.
Here we are in 2020, 2021. Maybe there's still a few more years to go for this expansion.
Could be. And it doesn't need to continue expanding at the same rate to
No,
be an
it can continue to come down, but in expansionary territory.
Yeah.
And I reckon we probably see some kind of slowdown as we continue to see rates rise. I reckon that'll slowly impact all of this stuff too.
Yep.
A couple of other things I want to show you. I think these are really interesting. Again, these are from, where are we? JP Morgan. I got these from Sam Rowe. Container ships outside the ports of LA and Long Beach. So the blue line is the number of vessels at anchor and on approach, and the orange line shows within 25 miles of port. And so you just see this massive decline. You had almost 100 container ships sitting outside just LA. But have a look at the peak. They were all basically, so the blue line's peaked in January of 2022, and the orange line is basically at zero because they're literally at port. Whereas before you're outside 25 miles, you're approaching port.
Yep.
And now it's all, the orange line's all the way at the bottom. But so too now you've got the number of container ships sitting at around 30 from 100 earlier this year.
That's crazy, isn't it? The first thing that jumps to my mind is that because they're all in Shanghai and they can't load up? Or is that because the throughput and the delays have now eased and there aren't as many ships kind of coming in?
That's an interesting point. No, I didn't. There was no reference to sort of the other side of the world, so to speak.
Because we had a chart a while back showing all the...
Yeah, we did.
with all the dots, I think it was.
Yeah, it was a...
Friggin' hundreds.
It was a visual shot of how many were outside. But look, I thought that was really interesting. And the second one, so it's not only shipping, but this is the trucking freight. So shippers find it much easier to secure capacity at the moment. This is what B of A's truck shipper survey was saying. This was like a week ago, at the back end of May. And so shippers' view of available capacity. jumps to 74, up 5.2 points, shipper seat available capacity. And so you can see, again, have a look back in end of 2020, which is interesting that it was that low. Their capacity was really low. Compared to now, capacity is almost at what it was before all this happened.
No, this is trucking.
You're trucking. This is trucks.
It's interesting because I was listening to a commentary about Walmart, and they were saying that Walmart announced that wages for truckers have now jumped up to 120,000 US, and that, I mean, in the States, I mean, it's not small money here, but it's a lot of money in the US when, average wages are, I think, 50,000 in the States. So it's pretty significant. So they were struggling to get people to sit in a truck and drive it. So they've had to increase rates, and everyone else is doing the same, Costco and so on and so forth. So I wonder if that then has a flow-on effect. We don't need as many trucks on the road now because there isn't the demand that there was previously.
Possibly.
But yeah, really interesting.
And the reason why I'm showing these things and trying to put this sort of narrative together is because I feel like the inflation having peaked, expectations dropping, rates really now working their way into the real world. You talk about property listings on there for longer, less there now. Property has fallen from its peak in Melbourne from February to, I think, a couple of weeks ago. So it's down 1.5%.
Yep.
It's like that's one day in the stock market.
28.5% to go, Christopher Joy. We're on our way.
Massive shout out to Chris Joy. Love reading his stuff. And so you've got then shipping and you've got trucking. And I feel like all of that mixed together kind of is starting to make a bit more sense to me.
Yeah. Yeah. No, I agree. I think, and if the Fed continues to raise rates at 50 basis points for the next two meetings and then maybe has a pause, maybe that's all they need to do for now.
But the other thing
maybe they don't need to keep pushing it.
Possibly. I mean, possibly. But also,
time.
If inflation's not continuing to rise beyond what we've seen so far, we know what inflation expectations have been.
Yep.
The Fed has talked about the interest rate hike cycle, and that's all been priced in, right? Yeah. So that's all. So there's only there's three things that can happen. One, everyone was right. The Fed was right. The market was right. Everyone was highly unlikely, right? There's almost zero probability of that happening. There's only two other things that are going to happen. You completely get it wrong and inflation continues to soar, which in turn has a far greater impact on the stock market, on the economy and so forth.
Yep.
Or the other thing is you got it wrong. You completely overshot, and no, inflation's not going to be 10% for the next 10 years. We've actually peaked.
Yeah.
And so rate expectations start to come down, and that's maybe why you're seeing a stock market rally for the next 2 weeks.
Yeah, possibly. I mean, absolutely. And we won't know till the end of the year and maybe even early next year.
Yeah.
But yeah, I wonder. So I read a tweet and I can't recall who it was from or where, but he was basically saying even if inflation goes to zero, the current prices stay, which I was like, oh yeah, I mean, that makes sense.
Was that Bob Schiller?
No, I don't know who it was. I can't remember. I'll try and find it. But anyway, so essentially, today's prices aren't changing unless we get deflation. And the only way we get deflation is if companies start to pass on the lower shipping costs that maybe they're experiencing if all those bottlenecks are starting to ease. If wages start to come down, highly unlikely. If interest rate, maybe stop and those sorts of increases don't come through. So, look, I think prices will probably stay where they are. It might take a little while for incomes to catch up for that, income increase versus inflation gap at the moment. Petrol obviously come down, so that's deflationary. Well, hopefully it comes down, so that's deflationary.
No, because the government tax, 50% reduction on tax is going to come back in.
Oh, Labor already increasing taxes.
No. That was what Morrison had put in place. He put a 50%
yeah, I know, man.
reduction. How long was that for? 3 months or 6 months?
I think it was 3.
You know what?
Just to get through the election.
Yeah, and now I can blame the Labor government for
raising taxes is what I mean.
Let's move on.
Yeah. So this last one, I just wanted to bring up. just really interesting, fascinating more than anything. It was about the baby formula shortage in the States. So I mean, I'd read about it, but I didn't really get the full context of it. So we'll bring up this Bloomberg article now. So essentially what they're saying is there are, I mean, the shortages are bad, but just how bad are they? So there are 10 states in the US that have basically their out of stock rate is 90%.
So you're what? You're out of stock by 90%. What does that mean?
So that is basically they only have 10% of infant formula tins on the shelves than compared to what they would normally have.
Right.
And this is across, so the 10 states, Arizona, Mississippi, California, Nevada, Tennessee, Rhode Island, Louisiana, Florida, and Washington. Now, some decent, Washington being not Washington, D.C., but Washington State. So, some decently populated states there, California being one of the key ones. Why
is there a baby formula shortage?
Well, it's continuing to get worse. So there are a couple of big issues. I mentioned earlier there are a couple of companies that had some, something got into it and it was causing bacterial infections for kids. And so they've been basically shut down. And so they have to go through and clean their factories and do what they have to do. And that takes time. So there's a lot of supply taking out of the market. The FDA, I was reading the Aussie CEO of Bubs. She was saying that the regulatory hurdles to be able to import formula into the US is so high and it's so difficult.
I was just looking at A2 Milk to see if they had...
Yeah, so I don't think they've received approval yet. I'm not sure on that, but Bubs certainly has. And the third one is just general supply chain issues and bottlenecks elsewhere in the world for those that have been able to import it into the States.
Does Ukraine also produce baby formula?
Maybe.
Is there a shortage?
I don't know, mate. I don't know.
Or Russia.
But the CEO of Bubs was saying that they're increasing production to send 1.25 million tins to the US, which, given the population there, is probably not a huge number.
Days worth.
But it helps, yeah. But the Dandenong plant is now running close to full capacity, 24 hours a day, 7 days a week.
What?
They are producing baby formula.
You're kidding?
No. So she said they
Wow.
increased it so that supply isn't disrupted here in Australia, but that they can kind of essentially export the increase across to the States. So it was really interesting. And the chart there, which I guess we can bring up now, is kind of just a bit of an idea of where the worst or the greatest impact is being felt. So Colorado, Wisconsin, and Indiana are the three least affected, and those 10 states.
Why can't you just get them from the other states?
You have to drive across the border, man. It's different taxes. Who knows?
Wow.
Well, I mean, everyone's struggling. I mean, if you're in California, you're not driving to Colorado or New Mexico.
Someone
Well,
to
maybe
ship it
you would.
over.
I don't know. Get family to ship
Yeah,
across.
that's
Anyway, so
interesting.
yeah, I just found it really interesting. I didn't really understand the gravity of kind of what was happening there.
All right, there you go. Long baby formula. Let's move on to director's
Maybe.
cuts.
All right, so we've got a few here. A couple
These
of
are
really
yours.
short ones. These are all mine, mate.
Yeah, man. Let's go
so
through
just
them.
Have a drink. Kick
Yeah,
back.
I'll relax.
So Australia's first quarter GDP came in, clocked in at 0.8%, 3.3% for the 12 months, which was slightly ahead of forecast. Interesting, given we've had floods in Queensland and New South Wales.
Q1? Why did Q1 take so long to come through?
Fuck, mate, because, I don't know, public holidays.
Everyone's working from home.
Possibly. So a pretty good result, given the US Q1 was negative. So, yeah, not bad.
So Australia's not on track for a recession.
Not yet.
Mate, lucky country. I'm telling you.
Tell you what, net exports were down, but I think it was the, I don't know, 20th straight quarter of positive net exports.
Don't know.
I remember being in high school, reading a textbook saying, we will never have net exports. I remember saying to me, like, fuck, that's pretty depressing. Look at us now.
And Australia never goes into recession.
No, takes a pandemic and then we're in it for like a second. This next one, just again interesting. There's a new index launched by S&P 500,
What is it?
The ASX S&P, which is the agribusiness index, which I was surprised there wasn't one earlier. I mean, agribusiness is a fairly massive part of the Australian economy.
Yeah.
So some of the companies in there, Treasury Wine, A2 Milk, New Farm, Elders, Bega Cheese. Treasury Wine, I was like, oh, yeah, I mean, that makes sense, right? Wine, producing wines, part
Vineyards.
of the agribusiness.
Yep.
Yeah. But fascinating. We'll bring up this chart really quickly. And just showing since 2017, so not a particularly long period of time, 5 years, but the relative performance of the different sub-industries or sub-indexes. And the agribusiness there in the light green. Yeah, has outperformed, banks, real estate,
Hasn't outperformed tech?
Not tech, but the ASX 200 more broadly. Give it a few weeks and tech might might
Just
drop
a few more
below.
days, I reckon. Forget weeks.
Yeah, so look, just interesting for those that are interested by this stuff.
I'd be interested to see how if you go back further.
Yeah,
Why did they use that 2017?
I don't know.
Like, it's, what is it, 5 years?
5 years, yeah.
Who gives a shit?
Yeah. I mean,
I'd be curious to see longer than that.
Early on, look, 17, 18. I mean, it's comfortably outperforming through to mid-18.
Yeah, that's why it's higher than everything else. If I rebased it at 2018, it'd be below everything else.
Well, what if you rebased it in 2020? Might be above everything else.
Who knows?
Yeah.
You can make it.
We could chop and change this all
to
day.
whatever you like.
All right.
Although I'd be, you know what's interesting? I would be.
Tell me what's interesting.
I
Rob.
would be short agri.
Whoa.
To the extent of the likes of Bega Cheese, A2 Milk, maybe not A2 Milk, but those that are. The reason being is there is so much happening now with fermentation and lab-grown meats and milks. Now, the dairy industry is going to have a massive, massive shake-up. There are a number of Aussie companies that have raised a shitload of capital that are basically creating what they call lab-grown milk.
Right.
And they replicate the fermentation process that cows go through.
Huh.
And so it's not a soy milk, oat milk, almond milk, rice milk.
What is it? Just
cashew milk.
Chemical milk.
I don't know. I haven't read too much into it, but what I do know is there's a lot going on in that space.
Yeah, okay.
There's a handful of Aussie companies that are doing it here onshore in Australia. And so for that reason, I don't know.
That's interesting. But agri, I would assume, is pretty well protected from inflation. I mean, I don't know if you've been to the supermarket lately, but far out.
Yeah.
Fruit and veg prices have gone through the roof.
Yeah, but then can't you also say...
But they're also quite cyclical.
Yeah, but can't you also say then staples like Woolworths and shopping retailers are also protected because then they kind of pass it on. You kind of got to buy the product. Which in turn, doesn't that mean stocks are a good inflation hedge too?
Well, they are until inflation gets really high. But
look, I take your point. I'm taking the piss.
You are taking the piss. I do not appreciate it.
I take your point. I agree and disagree with you. I mean, you could stump up an argument for anything being a good inflation hedge. Really.
All right. Well, long dated tech unprofitable companies. That's your task for the next week. All right. Next one. Apple phone production. So Apple forecasting or have ordered 220 million iPhones to be produced.
Where are they going to get the chips from?
Months. Doesn't matter.
I did see that they were.
They produce.
So they were going to Taiwan.
Yep.
As well.
And you mentioned a few weeks ago looking at China. Although I wonder if that's cooled.
Don't know.
What's happening.
I don't. Yeah, it'll be interesting to see how they get. So I went to. Anyway, I'll let you keep going. The chip shortage thing's still happening.
Still an issue. So just some interesting stats. So 220 million new iPhones being produced over the next 12 months. That is one for every 35 adults in the world.
I would have thought it'd be more.
That's mental. Really?
Think about it. If you've got 35, if you pick 35 random people in the city Buying a new one.
Not
year.
have an iPhone. This
Right,
is
okay.
buying a new one.
I would have expected it to be higher.
Okay. In the world? So you got like
Well,
India, Africa, poorer regions.
Yeah, okay. Maybe.
And they're big population of it. Anyway, here's the next thing, which is really interesting. There are, you've probably already read this.
I'm reading it now.
140 million babies born in the world on average, year after year. So we're not producing enough babies to satisfy Apple's phone.
So what happens
demands.
to all the old stuff?
Well, I think they went through a program a little while ago where they basically refurbish them and sell them into third world countries at lower
Developing
prices.
world.
Developing world, sorry. So at a lower price, so they get to experience the joy of having an Apple product.
Right.
And imagine this day and age, like recycling all those components.
I don't know how they
might be
recycle
more-
the batteries.
Right, it's throw them in the fire. Don't worry about that. But all the other components, I mean, I don't know. Given the shortages, you'd imagine.
So you're saying we don't have enough people.
we don't have enough people to satisfy.
So there's an oversupply.
oversupply. Or
Short Apple.
maybe the new Apple product is something to do with getting in the baby making business. I don't know. Maybe they've got to come up with something because
I don't
we're
know
not
what you're talking about
producing
anymore.
enough babies to satisfy Apple's phone production. This is an issue.
So we're living in a world of greed, and every year we're getting
course
a
we
new
are.
thing. Let's move on.
Yeah. All right. Last one. Very quickly. DeLorean. They're back.
DeLorean or DeLorean?
I don't know. I thought it was DeLorean, but DeLorean. However, potato. So we'll bring up this image now. It's a DeLorean.
That looks sick.
Have come up with a concept car. I think they're planning to produce it over the next 12 months or maybe 2 years.
By the time you get it, it'll be 5 years.
Yeah, all electric. Looks pretty cool. They've got the Golf Wing, kind of their trademark.
Isn't it
Ripped off by-
Gullwing?
Oh, is it Gullwing? Yeah, it is Gullwing. Fuck, man. You should have done this story. Elon Musk, Model X, took a lead from there. Anyway, the CEO noted it won't be street legal, so that was interesting. And 0 to 60 miles per hour at basically 3 seconds.
Is that
so
fast?
well, I think it's fast, but the Tesla Model S
What is it?
is about 1.9, and
Wow.
the Rimac Navara is about 1.8
Okay,
seconds.
slow.
So, relatively speaking, it's slow. But maybe 3 seconds is all you need to shoot off into the future. I don't know.
That car looks sick.
Does look pretty cool.
I did see a Tesla X model. We're at Eastland last week, and it just sort of opened up like that. Just looks so cool.
Does look cool.
I was in a Volvo showroom last week, and just super quick story. And I went in, and she's like, do you know what you're looking for? I said, look, something for maybe a hybrid or an electric. And she goes, yep. Do you want this or that? I'm like, I don't know. Like, just can someone help me? So having a browse the car, they all looked the same. Anyway, the lady came over and said, I'm looking for this. And I said, are these all the same? They look the same. She goes, yeah, all the cars in the showroom are the same. It's the XC60.
Right.
But they've got different options inside. I'm like, what a waste of floor space. Like, it's the same. It's the exact same car, man. The exact same car. One of them's got black interior. One of them's got camel grey.
Seriously?
Sand color interior, etc.
Well, they didn't have any other car models.
They had an XC40, one.
That was it?
That was it. And there was like
Wow.
8 or 9
Volvo, what are you doing?
XC60. Anyway, she goes, I said, look, we prefer to go with something hybrid or for full electric.
Okay.
She goes, we've got a mild electric. I said, sounds interesting. Tell me about that. Have you ever heard about this?
No.
This is the biggest scam in the world. When I was looking when I ticked the hybrid or electric box on car sales, Volvo XC60s come. So that's why I went there.
Right.
I'm like, brilliant. You're in a mild. I said, tell me about the mild. She goes, it's a petrol car. It's got a little battery in the back. So if you run out of petrol, this battery will get you to
The petrol station.
petrol-
Oh, fuck. Are you kidding me?
and it goes for it gets 80. You get 80 kilometers out of it. And she goes, and you can charge it. And I'm like, what a marketing scam! And so Volvo, that is a total
That's pretty
rort.
poor. Come on.
And
Shove a little battery in the back and call
go,
it a mild.
We're electric now.
Yeah.
And so the first full proper electric is coming in 2023. And the thing I thought about was, how are they going to compete with the likes of Tesla who have been doing this for years?
Yeah.
And look at DeLorean. Can't even get this fast-looking car. It's like twice the speed of that of the Tesla.
It's close. It's not even street legal.
And it's not even street legal. It's too slow. Anyway,
all right,
what do you got tips and recommendations for
All
us
right,
this week?
man. So I was flicking through Apple TV Plus the other night, and to my great surprise, a show came up. They Call Me Magic. It's about the great, one of the greatest, if not the greatest player of all time.
Sick.
Magic.
What's
Johnson,
it on?
Of Magic Johnson. Apple TV Plus.
Okay. Can you dub it for me?
I love this guy. Like, he was my basketball hero. Yeah, growing up. I'm a Knick fan, proud Knick fan. Should have been a Laker fan. Would have seen a championship, but yeah, he's just incredible. And they interviewed Michael Jordan and a whole bunch of other people, and they're all kind of like, this guy changed the game. Like,
but don't you think
6'7",
all
6'8"
players
guard.
kind of talk about everybody else in that respect?
Yeah, somewhat. I think.
I mean, they're not going to interview Michael Jordan and say Magic was shit.
No,
Like, he's not going to say that.
He might.
Who?
But
No,
Michael
he wouldn't.
might.
Did he
might.
say that?
No,
No,
didn't.
he didn't.
But-
What's your gripe against MJ?
Well, he's just not the greatest of all time. I think
All
everyone's.
That's another whole new podcast.
They're really interesting, and they talk a lot about kind of his competitive drive, and they show the comparison between him and Larry Bird, who
Larry
kind of
Bird.
came through
Gun.
college system together, kind of went to the NBA at the same time. And Magic was talking about his rookie year, Larry Bird, got 94 votes, and Magic got 6. And Magic like, far out. Okay, maybe I wasn't rookie of the year, but I wasn't that far behind. So Magic went on and they won. The Lakers won the championship in his rookie year. They had Kareem, but for Game 6 in Philly, they didn't have Kareem. And Magic started center, played forward and guard, won MVP for the finals, and only rookie to ever win a finals MVP.
Interesting.
And he won college championship the year before, NBA championship the next year. I think, again, he's the only rookie to do that. But if you love basketball, man, absolutely watch this. This guy, all-time legend, fascinating, really, really interesting. I'm 2 episodes in, I think. I don't know how many there are, but it's pretty good, pretty in-depth. They interview a lot of people. Obama's on there, Spike Lee's on there,
Obama, yeah.
Really interesting.
I still haven't watched the Lakers dynasty.
Yeah.
I haven't watched that either.
That's
and
good.
And so for I was away last week or the week before. Last week I was away for a few days on my own.
Yeah.
So since then, this is going to sound
Are
really.
you still not drinking coffee?
I haven't had a coffee.
Really?
Yeah, I've been drinking my dandelion tea. I haven't made you one.
Yeah, a little fancy tea. All right, sorry. Carry on.
So you know how I was talking about Deb was saying, "Oh, we should maybe just get rid of cancel Netflix." I was doing work on one night at home. I was on the laptop. I got an email saying, "Oh, we're sorry to see you. It's from Netflix. She's cancelled the Netflix." So I am a one less subscriber for the Netflix numbers. And the reason being, since I've got back, man, I haven't watched anything. And even my phone, my phone told me, like that weekend I was away, it says, you used your phone 8 hours less same time last week. I'm like, wow, how good was that? Like, it was just this, I don't know, man, just this complete...
You're unplugging.
That is my tip and recommendation to you. Have you ever done that?
I've tried.
It was
I don't use my phone that much.
I use my phone a lot.
Yeah. Yeah, that's crazy.
A lot. And so for me, disconnected Netflix. We disconnected Disney a long time ago. Stan, we just did a free thing. There wasn't much on Stan at the time. So we don't have we have no things at home anymore.
Really?
None.
What do you do?
Like,
you watch free to air.
No, I don't watch TV.
TV, just sell your TV.
I haven't watched
Get rid of
TV. I haven't been on social media as much, and it's been quite liberating.
Yeah, right.
And so my recommendation to you, just a week.
Unplug. All right, done.
You don't have to go to the extent of disconnecting
Turn my computer off.
Apple and so
Client,
forth.
sorry. not responding for a week.
That's not what I'm
under
talking
Rob's
about.
orders.
That's not what I'm talking about. So a bit of a dodgy tip recommendation, but for me, I don't have anything because I haven't been reading anything. I haven't been watching anything. I haven't been on anything, and it's been pretty
Except
good.
for dandelion tea. That's all you're on.
I'm high on dandelion tea.
Nice.
All right. You can watch on YouTube. You can comment on YouTube, and you can watch on Spotify if you forget. And everywhere else you get your podcasts. And so we will see you next week. Got a few ideas for next week about why I don't think we're in a recession now. I've changed my tune.
Oh.
Yep.
Wow.
We are not in a recession.
You waited to the end.
And next week I will explain why. Well, that's how you keep your audience going for the next episode.
All right.
All right, we're wrapping up now.
All right.
See you next week.
Bye.
My name's Robert Baharian, and I'm the founder and CEO of Baharian Wealth Management, AFSL 526-798. The information contained in this podcast by me, my colleague Matt Rigby, or any of our guests may include general advice and does not consider your personal circumstances. You should seek personal advice from a registered financial advisor who can consider whether the general advice is right for you.